Well, good morning, guys. I hope you had a great evening. Good morning so far as well. CPI is done. Looks like we survived again. So let's look at the market. Let's look at Focuslist. I think this chart says it all. I get a lot of questions and comments. That's how the market moves in the recent years, guys. You will see the market move in trust, then go sideways, chop around, waiting for the next catalyst. And then you think that it's a pure gamble. You think that because there's something waiting, there's a catalyst, there's some economic news and reports that the market will crash. But you need to recognize the shift. You need to recognize the clues following that trust to build that conviction to put some exposure before those gaps happen. If you wait for all the confirmation in the world, trading has been pretty hard in the last few years. That's a guarantee. Once everything looks good and shiny, then that's usually the time the market decides to pull back. And if it doesn't pull back, then it locks you out, like in last April. So just that to say that next week we had that big clue that the market was trying to turn. And then we backtested the now rising 21-day mid structure, and now you start to accumulate clues that the market is healthy and constructive going into what you think is a binary event. So that was the low, that was the rally, that was the follow-through day as well on the structure reclaim. Backtest, then we flagged. All right, we built higher lows of the right side of the 21-day mid structure. Tried to confirm a daily reversal once. It failed yesterday. Still higher low. And now what we do on CPI, it looks like we confirm that second reversal pivot reclaim for the second time after making a higher low. It's not to brag. It's not to say that I was right, because I'm very often wrong. It's just to explain that if you see me keep good exposure during those news reports, etc., that's just because that's how the market moves in recent years. So all you can do is try to build some cushion before those. I'm not saying to go full exposed on margin, without cushion, without feedback, without traction into those. But they are part of the game. All right. And if you are not positioned before, you have to chase. And then you chase, the market pulls back, you start to doubt that trend again, and on and on and on. You see the story. So it's super important to anchor yourself into the trend. What's the trend? And that's why I use the 21-day mid structure. Because sometimes it chops, yes, of course. Doesn't always work like any strategy. It fails. But it gives you an edge, repeatable hedge, to manage risk and to define the HUDs. And when you see a reclaim, it tells you that the market is trying to shift trend. We're trying to shift from a downtrend to an uptrend. And then when you see constructive action on the right side, then it reinforces the health of that potential trend shift. And then you combine that with how the leaders are acting. Are they being supported as well? Are they making higher lows? How the leaders are acting. So for example, SMH, reclaim back tests, still building higher lows. And while everyone thinks that those will fail and crash and go into a bear market, then you look at AEHR making a new all-time closing high, and you tell yourself, okay, maybe leadership is taking shape. They are telling the story and they are establishing themselves as future leadership and kind of reinforce the story of the group setting up. And then you had another layer. What the internals were and still sing. All right, we broke the 21-day moving structure after a good spike. And we are building lower highs below a declining 21-day moving structure. Same thing for the VIX. We spike, low high, lower highs. Rollover, downside reversal below a declining 21-day moving structure. And we had another layer. We look at breadth, participation, QQQ, price above a rising 21-day moving structure. The McClellan summation in an uptrend above a rising 10 DMA. And still oversold. That's the crazy part. The low was made the last day of July when our good friend Leo got liquidated. And we're still oversold because we were so oversold that we have a lot of room to go. And you keep that into mind. So you take everything into account. You look at price. You look at breadth. You look at the internals. And you look at leadership, liquid leaders, your traction. And then you forge that scenario, that you build that conviction that the market is still in an uptrend, still looking healthy. And more often than not, the news, the economic report will go in the direction of the trend. You have to establish yourself with the HUDs, and the HUDs are with the trend. I'm not inventing it. So that's it for the market, guys. I think the market tried to turn last week, confirmed that follow through day. We went sideways until this morning, until CPI. We are trying to confirm another daily reversal after higher lows and backtests of rising 21-day moving structure. And tomorrow we have PPI as well, another inflation report. I don't know if it will be as meaningful, but that's something to consider as well. All right, let's look at the focus list. Time is going fast. Hey, good morning, my friend. And guys, stop me if you have questions. we are here for that. All right, focus list for me. So many stuff gapping up already. AXTI, I received some bad comments over that last night for seeing this as a long opportunity. But when you know, right? You have that correction, reclaim, backtest, new high. We are in an uptrend and we have that backtest as well. So you combine the market setting up, the semis setting up, all leadership that is not always dead. All right. Just a little cue. When the market is good, it's very rare that you don't have the semis participating. So it's always a good idea to keep being active into the semiconductors. Yeah, it happened, I think, last year, and it happens from time to time that the market is good, tech is good, but semis are not participating. But when they turn, and for the market to be really strong, you need those semis. This is a big group. So you always want to keep an eye on this. CRDO was shaping up very nicely yesterday, but another one gapping up. Form, very nice reclaim and backtest, higher low, now gapping up. And the stuff gapping up, don't remove it right away from your focus list. Keep it close. Maybe we'll have a good shakeout intraday that will allow you to put some trades on into weakness. Maybe tomorrow morning on PPI we have some kind of shakeout as well. So keep your focus list fresh. It's not because that they are gapping up that they are dead, but wait for that shakeout. Wait for that weakness. Wait for the name to come back inside the one ATR from the 21 EMA rule that I have. That will keep you from buying extended stock. Marvel, same thing. Semis, reclaim, backtest. A-Lab doing the same thing. Stuff that I sold, but I was stopped out below the 21 DME structure anyway. But they are shaking out, so that could have fuel today as well. With market participants chasing back after that shakeout. TER, that's a name that I'm in, looking good this morning. Again, same thing. Reclaim, backtest, super orderly, fill that gap. Nice shakeout as well 2 days ago. AOI, a bit of a boost on light report. Micron, that might be actually the only name that I put on today. We are opening right into the 21 DME structure, declining structure. This is the prior leading group. This is a very nice orderly correction. Higher lows of the right side. We didn't reclaim the 21 DME structure yet. So I know it's not my typical buy, but at the same time, this is such a strong group. And I want to test it on the first reclaim. So now we're right into resistance on that gap up. I would watch this morning for some type of rejection. If we can fill the gap, if we can backtest the 21 EMA, that will be my spot to test a position in Micron. Dell, if you're not already in HPE, Oost, it was more in focus list on weakness. Now it's above the 1 ATR from the 21 EMA. ASTS trying to turn as well, reclaim backtest, higher low. ERDM, reclaim, backtest, higher low in the 21 day structure. And frog, that's a bit what I explained yesterday at the close, why I closed that frog. If you look at IGV software, they are a bit extended right into supply. They need probably time to digest. So yeah, it was worth a shot yesterday, but it didn't work right away. So at this point, now what we're seeing is a rotation again, and that rotation is still going on. And we discussed that one last week and 2 weeks ago. We can't get that semis, software, cybersecurity pushing all at the same time, and that's a good thing, to be honest. But you need to time it right. It's not because that semis are setting up that software are setting up as well, and it seems that they are a bit inverted in the sense that when semis are setting up, then software might be due for some type of pullback, digestion, cool off, however you want to call it, while semi take the lead, and then maybe semis push and then need time to rest, to cool off, and then software might take back the lead. So watch for that rotation. It means that if the group is extended and need to cool off, then the software name right at the 21 DME structure might not be ready, might need to shake out a bit. And that's what I will look in the next few days. I would like to have some software exposure, but again, I don't think that right now is the right time. All right, what else? I think we covered it all, guys. Market, again, price above a rising 21 DME structure. So price above a 21 DME structure, we have that reclaim on the follow through day, back test higher low into the rising 21 DME structure. We have that daily reversal confirmation this morning on the CPI. We need to see that pivot hold though. All right, 29,887. That's the reversal pivot. That's yesterday's high. That needs to hold to still confirm that continuation. Internals, credit spreads, VIX, all below and tame below a declining 21 DME structure. We have Brett, McClellan summation in an uptrend above a rising 10 DMA. We're still oversold, a lot of room to the upside. Liquid leaders are acting well, making new all-time highs. I mean, what else do you need? Okay, this is an uptrend until it fails, until we see structure being broken down. You stay long and you buy that weakness and you trust that structure and you follow feedback and traction, control your NAIR, and yeah, that's how you do it, guys. So I don't know if there's any more questions. And again, game plan for me this morning, like I said, I'm really eyeing this Micron trade for a bit, but I want to get it right. So waiting for some weakness. And also, if you don't have the exposure that you wanted into today, that's perfectly fine. I know that if you didn't engage pretty early in those 2-3 days, the low, I always don't like to engage on the low. This is still below structure. This is still at risk. There's no guarantee. We're still in a downtrend. But when you start to see those constructive action, right? And we talked about that in April as well. But now we have a daily reversal. So yeah, it's still a downtrend, but you get a daily reversal, and that same thing happened. But what happens after the daily reversal in a downtrend is important. All right, we retest, we backtest the reversal pivot and close green. And I think that right here, that's when I engaged with futures and started to add exposure. But when you see that the market don't want to reject a declining structure and that the reversal pivot holds, we're still making higher lows, we reclaim the 21 EMA, well, you're starting to pick up clues that the market doesn't want to reject structure and buying pressure is building up, especially when you have the McClellan summation, and it was right here. When the McClellan summation is at 2 standard deviation, lowest reading of the last 2 years, market is really stretched to the downside. And sometimes you get a price correction, sometimes you get, and I think that if you look at the McClellan summation, it peaked early May. All right, right here. So all this was on declining breadth. So all this action created that McClellan summation oversold condition. That's a long time. So that's what I meant. The market can correct through price or time. And that was the same thing earlier this year and to end last year as well. You have a time correction, then a quick flush to shake out to make you think that the market will roll over, going into a big market crash, but the market is already oversold. And same thing happened this month, or last month, sorry. All right, not a lot of questions this morning. I don't know if you guys are already in panda mode or trying to chase that gap. But anyway, if you have questions, you know where to find me. Take it easy, guys. This is not a race. This is a marathon. So wait for your spot. Wait for that weakness. Go in slowly. Test a position. If you don't have traction, then you don't need to put something else. But if we have weakness, you put on a position, the market bounce right away, you get traction, then it's the feedback you need to continue to build that exposure. Have a good day, guys. Enjoy. And you know where to find me if you still have questions. All right. Cheers. Bye-bye.